Understanding the difference between revenue and profit is crucial to a business's success. They both show up on your income statement or your profit and loss report, but they're very different numbers. Today we're going to talk about what these differences are and why you need to know what each one represents. This is extremely important when looking at the PPP Loan Second Draw qualifications. If you're a small business owner, or if you're an online virtual bookkeeper, you need to know the difference so that you can make smart business decisions. Don't miss today's episode, especially if you're considering the PPP Loan Second Draw. You're listening to the Mastering Your Small Business Finances podcast, where we get straight to the point on topics that ultimately affect your bottom line. That's right, as an entrepreneur with a small business, money management, growth, marketing, they all affect your bottom line. I'm your host, Chris Ponick. I'm a certified public accountant, and I've been helping small business owners like you navigate and easily understand these complicated topics for over 25 years. I'm a wife, a mom, a grandmother, and a small business owner myself, so I know your time is valuable. In my free time, I make the best sugar cookies and have mastered an amazing chocolate chip cookie recipe. And that's not just my opinion. You're in the right place. I promise your time will be well spent here. Each week, you'll gain confidence and clarity while making a successful impact on your business and grow your bottom line. Get comfy, grab a cookie, and let's get straight to the point with this week's episode. Are you looking for a computerized software solution to do your bookkeeping? I highly recommend checking out QuickBooks Online. I've been using QuickBooks myself for over 20 years, and they really know how to streamline processes and make your bookkeeping and recording your transactions simple and easy. QuickBooks is one of the top software solutions used by small business owners, and I would say that over 95% of my clients are currently using QuickBooks for their businesses. One of the features most of my clients and I take advantage of is the option to set up bank feeds. You simply link your bank account to your QuickBooks account, and QuickBooks will automatically import each transaction into your QuickBooks file. You'll save a ton of time not having to manually enter each of these transactions. You simply review each of the transactions and make sure they're getting recorded to the appropriate account, and then click one button and they're in. Want to know more? Head over to financialadventure.com/QuickBooks and learn how you can save 50% off of your first 3 months. Welcome back. Today we're talking about the differences between revenue and profit. Often these two words are interchangeable or used as one and the same word, but they are actually very different numbers. Have you been guilty of using these words without really knowing what they mean? If so, after today's episode, you'll be more mindful and you'll know exactly what each word means, as well as how it impacts your small business. We're going to start with revenue. Revenue is defined as all income generated from your business during a specific period of time. It consists of all income before any expenses. When you're looking at an income statement or profit and loss report, you will find revenue at the top of your income statement. It may also be called sales or income. Just know that whatever you have it labeled as in your chart of accounts, it is all the income generated from your business. Now, profit, on the other hand, is what is remaining from your revenue after all of your expenses have been deducted. You'll often hear people reference this as your bottom line. The profit is simply calculated by taking your total income generated from your business or revenue less all of your expenses. These expenses would include cost of goods sold, wages, advertising, office expenses, utilities, or telephone, just to mention a few. Really, any expense your business is incurring. Profit is also often referred to as your net income. Every business needs to earn a profit to be successful, and it's normally the primary goal of the business. You may have also heard about the term gross profit. Before we dive too deep into gross profit, I want to quickly explain what cost of goods sold are. Cost of goods sold is the term referenced to all the costs that are directly related to selling your product. This could include cost of materials and labor directly used to create the product. Now, back to gross profit. This is calculated by taking your total cost of goods sold and subtracting it from your total revenue amount. Your goal for your gross profit would be to always have a positive number. If this number is a negative number, it means that your cost of goods sold is actually higher than your revenues. In this case, you would want to quickly take another look at your sales prices and make sure that you're charging enough to cover all of your costs of the product that you're selling and include the additional amount you want to make on each sale. If you're seeing a negative gross profit, you will want to make sure you catch it and make any changes necessary before too much time has passed and you have been consistently losing money on the sale of your products. This is a good reason why you want to make sure you're staying up to date and current on your bookkeeping so that you could catch an issue like this and turn those numbers around. Having your books up to date is a very crucial piece of running a successful small business. Another thing to think about is the fact that you could easily have revenue, but no profit. And on the flip side, you cannot have profit without revenue. For example, if you have more expenses than revenue, there would be no profit. But you would still have revenues from your sales. You also would never have a negative revenue number, but you could have a negative profit number, which would be a net loss. So why is this important if you're considering the PPP Loan Second Draw? The first qualification for round 2 of the PPP loan is to have gross receipts or revenues that have dropped by more than 25% in 2020 compared to 2019. They're looking at these numbers on a quarter-to-quarter basis. You'll want to look at your income statement or profit and loss report for each quarter and compare your revenue amounts to see if you do indeed qualify with more than a 25% decrease in your revenues. If you're using a software for your bookkeeping, such as QuickBooks Desktop or QuickBooks Online, you can quickly create a profit and loss report for each quarter and modify the report to include the prior year and the dollar amount difference as well as the percentage. This report will tell you right away when you look at your gross receipt or revenue number and the percentage reflected on the report if you qualify for the second round of the PPP loan. This is the report you will want to bring to your bank to start the conversation about applying for a PPP Loan Second Draw. Lastly, just remember that profit is a part of your revenue, and a positive profit number is an indicator that the business is doing well financially. If your expenses are more than your revenues, you will show a negative profit number or a net loss. All right, to recap this episode. Number 1, revenue and profit. Often these two words are interchangeable, but they are actually very different numbers. Number 2, revenue is defined as all income generated from your business during a specific period of time. Number 3, profit, on the other hand, is what is remaining from your revenue after all of your expenses have been deducted. Number 4, gross profit is calculated by taking your total cost of goods sold and subtracting it from your total revenue amount. Your goal for your gross profit would be to always have a positive number, or you will never be able to show a net income. Number 5, the first qualification for round 2 of the PPP loan is to have gross receipts or revenues that have dropped by more than 25% in 2020 compared to 2019 on a quarter-to-quarter basis. One more thing, if you're thinking about starting an online virtual bookkeeping business, I have a few coaching opportunities available. I'm only taking on a few one-on-one coaching clients each month So if you're ready to start your own online virtual bookkeeping business, go to financialadventure.com/discovery and let's chat. I help you start, grow, and scale your online virtual bookkeeping business with actionable steps and accountability to fast track your success by setting up your business quickly and start getting clients right away. And having clients means revenue. So what are you waiting for? Like Karen Lamb says, a year from now, you may wish you had started today. And you know I'm going to ask, what's at least one thing you'll take away from this episode that will help your business succeed and grow your bottom line? If you need some accountability, join our private Facebook community and post your action item. We'd love to support you. Thanks for taking the time to tune into this episode of Mastering Your Small Business Finances. If you enjoyed this episode as much as I enjoyed creating it for you, I'd love for you to give it a 5-star rating and subscribe to the show so you never miss an episode. Visit financialadventure.com for the show notes, links from this episode, and while you're there, leave a comment if you have a topic you're interested in learning more about that affects your bottom line. If you're looking for a community where you can ask questions and get feedback about your small business, join my private Facebook group. You can find the links to this group and more on financialadventure.com. And remember, any financial information shared on this podcast is not to be considered professional, financial, or tax advice and should not be solely relied upon. Please consult your CPA or tax advisor for an opinion on your specific circumstances. I'm looking forward to having you tune in next time. Until then, dream big, follow your heart, and love what you do.